If your Social Security benefits are sent by direct deposit, there's a change that took effect about a year ago that is still causing a lot of confusion, and if you don't understand it clearly, it could put your monthly payment at risk. So let's walk through it step by step so that by the end, you know what changed, why it changed, what your options are now, and how to protect yourself going forward. More than 71 million people receive Social Security benefits, and almost 7.5 million receive supplemental security income, which means over 75 million Americans are getting payments from the Social Security Administration, SSA, every month, and every one of them should be aware of this. On April 14, 2025, SSA implemented a major policy shift that fundamentally altered how beneficiaries can update their direct deposit details. Before that date, if you wanted to send your benefits to a new bank account, you could simply call SSA's national 800 number, answer some identity verification questions, and the agent could change your direct deposit information over the phone. It was straightforward, and millions of people used that method for years. That option is now gone. You can no longer phone Social Security and have an agent change your bank account information for direct deposit. That channel has been closed as a fraud prevention measure. The reason is the scale of fraud that was happening under the old system. According to SSA's acting commissioner, speaking at a press conference in late February 2026, roughly $100 million per year was being lost to direct deposit scams. The pattern worked like this. Someone obtained enough of a beneficiary's personal data, name, Social Security number, date of birth, and then called SSA pretending to be that person, saying they needed to update their bank account. Because the verification process relied primarily on matching those personal details, phone agents often had no reliable way to tell whether the caller was the actual beneficiary or an imposter. If the caller answered the questions correctly, the change went through, and the next benefit payment was routed to the scammer's account instead of the real one. Often, by the time the legitimate beneficiary realized their payment was missing, the funds were already withdrawn. SSA's Office of the Inspector General, OIG, issued a report in September 2025 highlighting this vulnerability, noting that until April 14, 2025, staff could change direct deposit over the phone using relatively basic personal info checks that were not robust enough to prevent unauthorized changes. In one review period, the OIG estimated that SSA identified about $2.2 million in misdirected payments and had not recovered around $2 million of that total. Those were just the cases that had surfaced in that specific review, not the full picture across the system, which is why overall annual losses were estimated near $100 million. At the same time, the Federal Trade Commission reported receiving more than 330,000 complaints about government impersonation scams in 2025, about 25% more than the prior year, with Social Security impersonation among the most common themes. SSA and its OIG partnered for a Slam the Scam awareness campaign on March 5, 2026. And in early April 2026, federal officials warned that these scams were becoming more tailored and convincing, using more personal information to sound legitimate. SSA's upgraded fraud detection tools have flagged more than 20,000 suspicious direct deposit transactions since they were put in place. Taken together, these facts led SSA to conclude that phone-based direct deposit changes were too easy to exploit, so they eliminated that option and replaced it with two specific methods for updating your banking information. The first and preferred method is to use your personal My Social Security account online at ssa.gov. When you create this account, you go through a digital identity verification process using login.gov or id.me, SSA's credential service partners. That process requires your Social Security number, a government-issued photo ID, and in some cases additional checks, which helps establish that the person creating and using the account is actually the beneficiary. Once the account is active, SSA has much higher confidence in the user's identity. So when you log in and go to the My Profile section to change direct deposit, the system treats it as a secure request. The online route is also the fastest and most convenient. You sign in, enter the new routing and account numbers, confirm, and the change is complete. No long phone waits, no travel to an office. That same account lets you see your benefit amount, review your earnings history, download benefit verification letters, update your mailing address, and manage many other aspects of your record. The second way to update direct deposit is to go in person to a local Social Security field office. You bring valid ID, speak with a representative face-to-face, confirm your identity, and the staff member processes the change. This approach can mean more waiting, especially without an appointment, but it remains available for people who are not comfortable online or do not have reliable internet. SSA performance data show that service metrics have improved somewhat, with reduced average phone wait times and some gains at field offices, but in-person visits are generally more time-consuming than using my Social Security. Importantly, SSA is continuing to move toward digital tools overall. The agency has adopted a digital-first strategy and shifted more services online. As of September 30th, 2025, paper checks for Social Security and other federal benefits were effectively phased out. Payments are now issued electronically, either by direct deposit to a bank account or onto a Direct Express prepaid debit card, with only narrow hardship waivers available. This underscores how important it is to have electronic access to manage your benefits. One practical issue that causes many avoidable problems is changing banks. If you decide to move your Social Security deposit to a new account because you moved, found a bank with better terms, or want to separate funds for budgeting, there is one key rule. Do not close your old bank account until you are sure your payment has successfully started arriving in the new account, and it is prudent to wait through at least 1 or 2 full payment cycles. If SSA tries to send your benefit to an account that has already been closed, the bank will reject the deposit and return the money to SSA. Your payment then enters a kind of suspended status. SSA does not automatically reroute it to your new account. You will have to contact SSA, update your information, and wait for the change to be processed. Combined with the agency's current fraud prevention checks and general workload, this can mean going several weeks, sometimes up to 30 days or more, without receiving your payment. For many beneficiaries who depend on Social Security as their main income, that kind of gap can be very difficult. Keeping your old account open until you have seen 1 or 2 successful deposits into the new account is an easy way to avoid this disruption. The same rules and best practices also apply to representative payees, people who manage Social Security or SSI payments for someone else, such as a parent, spouse, or other relative. If you are a representative payee, you must also use either the My Social Security portal in your payee capacity or an in-person field office visit to change direct deposit. The phone option is gone for payees as well. Representative payees were also required to move to electronic payment, direct deposit, or Direct Express by the September 30th, 2025 deadline, unless they were granted a specific waiver. If you are in that role and haven't set up an online account or confirmed that payment is electronic and current, that should be addressed as soon as possible. Looking at the broader context, there is additional pressure on the Social Security system itself. The Congressional Budget Office projected in February 2026 that the Old Age and Survivors Insurance Trust Fund could be depleted by around 2032, about a year earlier than previous estimates. In that scenario, if Congress does not act, ongoing payroll tax revenue would cover only about 72 to 75% of scheduled benefits, implying a possible across-the-board reduction of roughly 25 to 28%. That does not mean Social Security would disappear, payroll taxes would still be collected, but it does highlight how important it is that existing benefits go to the rightful recipients and are not siphoned off by fraud. This is part of why SSA has tightened its direct deposit processes. Scam awareness remains crucial. Government impersonation schemes are at record levels and becoming more convincing. If you receive an unsolicited call, email, text, or letter claiming to be from Social Security and asking you to verify or update your bank account, provide your full SSN, or make an immediate payment, treat it with extreme caution. SSA will not threaten to arrest you, suspend your number, or demand payment in gift cards or cryptocurrency. If you are ever uncertain about a communication, end the contact and reach out to SSA directly using the official website, ssa.gov, or the published toll-free number you look up yourself, not one provided in the suspicious message. To summarize where things stand today, As of April 2026, you cannot change your Social Security direct deposit over the phone. That option was removed on April 14, 2025, due to fraud concerns. You now have two ways to update your bank details: through your My Social Security online account at ssa.gov after identity verification through login.gov or id.me, which is typically the fastest and easiest, or by visiting a local SSA field office in person with proper identification. Paper checks have largely been phased out, making electronic payment the norm. If you change banks, keep your old account open until you've seen at least 1 or 2 successful deposits into your new account. And stay vigilant about scams by initiating contact with SSA yourself whenever you have questions. These rules can feel like an adjustment if you were used to the old phone system, but they are designed to help ensure that your benefits, which you earned over a lifetime of work, reach you safely and reliably.